In today's financial landscape, understanding how to raise your credit score and effectively use credit cards is more important than ever. Your credit score is a 3-digit number that can significantly impact your financial opportunities, from securing loans to renting an apartment. A higher credit score often translates to lower interest rates and better terms on loans, which can save you thousands of dollars over time. Credit cards, when used wisely, can be a powerful tool in building and maintaining a strong credit score. In this video, we'll dive into the essentials of improving your credit score and mastering credit card usage. You can expect to learn practical tips on how to boost your score, such as making timely payments, keeping your credit utilization low, and understanding the factors that influence your score. We'll also discuss the different types of credit cards available and how to choose the right one for your financial goals. But why should you care about having a good credit score? Well, a solid credit score opens doors to numerous financial benefits. It can lead to lower insurance premiums, better loan terms, and even job opportunities, as some employers check credit scores during the hiring process. By the end of this video, you'll have a clearer understanding of how to navigate the world of credit, empowering you to take control of your financial future. So, let's get started on this journey to better credit. Understanding credit scores. A credit score is a numerical representation of your creditworthiness, typically ranging from 300 to 850. This score is crucial because it helps lenders assess the risk of lending you money. Generally, a higher score indicates better creditworthiness, while a lower score can make it challenging to secure loans or credit cards. Most lenders consider a score above 700 to be good, while anything below 600 may be viewed as risky. Several factors influence your credit score, with payment history being the most significant. This accounts for about 35% of your score, meaning that consistently making on-time payments can greatly enhance your credit profile. Another critical factor is credit utilization, which measures how much of your available credit you are using. Ideally, you should aim to keep this ratio below 30%. Other elements that contribute to your score include the length of your credit history, types of credit accounts, and recent credit inquiries. Monitoring your credit score regularly is essential for maintaining a healthy financial life. By keeping an eye on your score, you can identify any discrepancies or fraudulent activities that may negatively impact your credit. Additionally, regular monitoring allows you to track your progress as you implement strategies to improve your score. Understanding your credit score and its implications can empower you to make informed financial decisions, ultimately leading to better opportunities and lower costs in the long run. Ways to raise your credit score. Improving your credit score may seem daunting, but there are several actionable tips you can implement to see positive results. One of the most effective strategies is to ensure timely payments on all your bills. Payment history accounts for a significant portion of your credit score, so consistently paying your credit card bills, loans, and even utility bills on time can help maintain a positive payment history. Setting up automatic payments or reminders can make this process easier and more reliable. Another crucial tip is to keep your credit utilization below 30%. This means that if you have a credit limit of $10,000, you should aim to use no more than $3,000 at any given time. High credit utilization can signal to lenders that you may be over-reliant on credit, which can negatively impact your score. To manage this effectively, consider paying down existing balances and avoiding maxing out your credit cards. Lastly, diversifying your credit types can also contribute to a healthier credit score. Having a mix of credit accounts, such as installment loans, like car loans or mortgages, and revolving credit, like credit cards, shows lenders that you can handle different types of credit responsibly. This variety can enhance your credit profile and improve your score over time. By following these tips, you can take proactive steps toward raising your credit score and achieving your financial goals. How credit cards work. Credit cards are powerful financial tools that allow you to borrow money up to a predetermined limit, enabling you to make purchases without needing immediate cash. When you use a credit card, you're essentially taking out a short-term loan from the card issuer, which you agree to pay back later. This borrowing capacity can be incredibly useful for managing expenses, especially in emergencies or when making larger purchases. However, it's essential to understand interest rates associated with credit cards. If you don't pay off your balance in full by the due date, you'll incur interest on the remaining amount. These rates can be quite high, leading to significant debt if not managed properly. To avoid falling into a cycle of debt, aim to pay off your balance each month. This practice not only helps you maintain financial health but also improves your credit score over time. Additionally, many credit cards offer rewards programs that provide benefits such as cash back, travel points, or discounts on future purchases. These rewards can add value to your spending, making it more rewarding to use your card responsibly. Moreover, using credit cards wisely helps you build a positive credit history, which is crucial for future financial endeavors like applying for loans or mortgages. By understanding how credit cards work and leveraging their benefits, you can enhance your personal finance strategy while avoiding common pitfalls associated with credit misuse. Common credit card mistakes to avoid. Navigating the world of credit cards can be tricky, and there are several common mistakes that can negatively impact your credit score. One of the most significant pitfalls is making late payments. Payment history is a crucial factor in determining your credit score, and even a single late payment can cause it to drop significantly. To avoid this, set up reminders or automatic payments to ensure you never miss a due date. Consistency in timely payments is key to maintaining a healthy credit profile. Another mistake to steer clear of is maxing out your credit limits. When you use a large portion of your available credit, it can lead to high credit utilization ratios, which can harm your score. Ideally, you should keep your utilization below 30%. If you find yourself nearing your limit, consider paying down your balance or requesting a credit limit increase to improve your ratio. Additionally, be cautious about unnecessary credit inquiries. Each time you apply for a new credit card or loan, a hard inquiry is made on your credit report, which can temporarily lower your score. While it's important to shop around for the best rates, limit your applications to only those that are necessary. By avoiding these common mistakes, late payments, maxing out credit limits, and excessive inquiries, you can protect your credit score and set yourself up for better financial opportunities in the future. In this video, we've explored the vital role that maintaining a good credit score and understanding credit cards play in your financial health. A strong credit score can open doors to better loan terms, lower interest rates, and even job opportunities, making it essential to prioritize your credit management. We've also discussed how credit cards can be beneficial when used responsibly, allowing you to borrow money up to a certain limit while building your credit history. To improve your credit situation, remember the actionable steps we covered: make timely payments, keep your credit utilization below 30%, and diversify your credit types. Avoid common pitfalls like late payments, maxing out your credit limits, and unnecessary credit inquiries. By implementing these strategies, you can take control of your credit and work towards a brighter financial future. Thank you for watching, and remember, taking small steps today can lead to significant improvements in your financial well-being tomorrow.